A little old school trading trick for you guys. Today we're going to be talking about the crack spread. My name is Jonathan Rose. I'm the owner of Active Day Trader. The edge of the retail trader is you can sit back and only trade when you see a really special opportunity. Every trade that you make needs a really strong why though. Relying on technical analysis alone, it's not enough. Today, I'm going to show you what the crack spread is, and hopefully you'll find that it's a useful market signal on potential price moves for the overall oil market and any refinery stocks. So let's get into it. In front of you, this is what the crack spread looks like. You can see it's kind of mean reverting. It's not really going anywhere. When it gets real high, it comes low. When it gets real low, it goes high. The crack spread, it refers to the overall pricing difference between a barrel of crude oil and the petroleum products that are refined from it. That's why it's called the crack. When the price widens, which means when it rallies, the price of the refined products are outpacing the price of oil. When it goes lower, it's just the opposite. Overall, you can use this one chart to show you the profit margin of refineries. So overall, getting is good. Margins are huge. Probably not going to get any better than it is here. Down here, margins are getting squeezed. Business is tough. We got to expect those margins to rally if these guys are even going to stay in business. Now, before I get into how to use this, I want to show you why I created this formula how I did. Now, it's pretty straightforward. This is considered like the most basic crack spread. It's just 1-to-1. Now, it's 42 because there are 42 gallons per barrel of gasoline. So all we're doing is we're taking the price of RBOB times 42 and then subtracting it from the price of oil. And I'm using WTI, which is US oil, and that gets us the crack spread right here. Right now, crack spread's trading at 8. It got up to 29, but you can see going back to 2016, the mean is about 16. Now, this is one of those charts that I keep up and I look at from time to time, because if we look back and we see the mean right around 16, there's not really very much to do when it stays in between these, close to the mean, say within a standard deviation or two standard deviations. But when it does break out and refineries margins get really, really low, it's probably a good opportunity to find some different refineries to buy. It might be more investing than trading because this is kind of a long-term hold. It's really a high percentage play. What I did here is I took our crack spread, which is going to be the white line or whatever color this is, and I overlapped it with two of the refineries. I overlapped it with MPC and VLO, Marathon Oil and Valero. Going back, you can see how MPC and VLO kind of follow the crack spread, right? They get really, really low. They get really low here because the margins are really small. But all of a sudden, right here, when you see the crack spread gap up, that means the time for refineries is going to get way, 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 way better. And so all of a sudden, you see them rally into it. Same thing. Margins go down. A little bit of a delayed, right? VLO rallied like crazy, but inevitably, they're coming lower. Now, since it's at the lowest it's really been in a long time, there's a really unique opportunity to get long oil refineries. Right now, I'm just looking at two of them. What I want you to do is look for other correlations. What I did is I have a guide. It's called the Ultimate Trading Guide. The Ultimate Trading Guide explains exactly how to find different correlations when you're drilling into one industry. In the comments below or in the description, I'm going to leave the Ultimate Guide to Trading. What I want you to do is I want you to find refineries that are correlated to the rest of the industry, so they have to be bigger players, and find out which ones are undervalued relative to the other ones. Once you go through that exercise, leave in the comments what you found, because we can find these trades together. It's a really good high percentage trade, but what we need to do is do research. because in the refinery kind of industry, you're going to see 10, 15, 20 different stocks. Let's go through them together, overlap them, analyze them, and let's share what you think is the most inexpensive and maybe the most expensive in this sector. Leave it in the comments, and I think that we're going to see the benefit of working together and finding trades together. Now, this is more of a long-term hold, but whenever you're trading oil, whenever you're specifically trading the refineries, always take a look at the crack spread, see where it's trading at, and once in a while, it's going to break out of its range like it is now, which is going to present a really good opportunity for long-term investing in the refinery industry. My favorite right now is probably Marathon. I need to drill into it more. So check out the Ultimate Guide to Trading. Again, in the description, click on a link and let's do some research together. Let's see what we find. Those who participate will always get the most benefit. Thanks for watching. My name is Jonathan Rose, owner of Active Day Trader.